you look at the Taiwanese index, that one is up around 2.5%. We have the Hang Seng, which is up 0.6%.
That requires an airline or airlines which is size and scale, which can operate and compete on a global basis.
I would say we should not presume that a fresh move, sort of lower is starting until and unless you break the swing low of 24,753.
Signed a $500 million grant funding with the UK government.
25,022 at this stage. That's a 0.4% pop.
That our residential business is fueled and we have a proper pipeline in the various cities that we operate in.
Nearly 11% equity got changed hands. We had indicated that the private equity investors, including Sequoia, was a big seller in today's block.
Nifty holds above 25,000 in the green with a gain of about 1/3 of a percentage point.
More than scared, a sense of preparedness is always good.
तो रशिया से भी अगर उत्पादन और अधिक आता है तो हम उसका भी स्वागत करेंगे.
Incrementally, the funding for long-term infrastructure projects will have to come from markets.
Aims for profitability with a focus on compliance-first business.
Started off with a bang. We've come off from the highs, but still managing around the 25,000 mark.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, this is Closing Bell. Last the day so far, as we documented through the course of the day today. But what really has mattered as we begin the last hour is essentially the last half an hour, because starting 2 o'clock, the texture, the tone, the tenor, everything has changed, and it's basically the market on steroids. In 30 minutes, you rarely see these kind of moves, but today is one of them. We'll talk more about this. Nifty basically from 25,000 has gone up to 25,250, 240 in the last 30 minutes flat. We were at 25,000 at 2 o'clock, and now we are where we are. So that's the talking point. We'll discuss this in greater detail as we go along. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, good afternoon.
Hi, afternoon. It's really turning out to be a good afternoon. And you were just saying in the morning, right, for the last 2 days, the Nifty was struggling to go above 25,110, 120. It used to hit that level and retreat.
Yeah.
But today, we've convincingly broken that level and gone way beyond.
And the question is, what has led to this?
The birthday?
Birthday.
I think the birthday
I would love to take credit for that, but it seems that
you don't have to take credit. We're giving you credit.
but if you just to look at the options perspective, because today's a Thursday, so you have weekly expiry that plays out. The level that Prashant was mentioning, the 25,130 mark, 25,150, there was a lot of call writing such that we defend that mark. So once we got past that 25,130, you see from there we have taken off. Because the call writers now are getting stuck on the wrong side. And the Nifty bank that couldn't get past that 51,500 odd, that's managed to move above that. A lot of large cap names have moved. A few names that have moved in the last 30 minutes or so. HDFC Bank, Reliance Industries, and Bharti Airtel. Take a look at Bharti's chart, in fact. Big up move out there. So it's a party. I'm happy to be celebrating my birthday over here, and the Bulls are celebrating with me. I like it.
I think next year you should do an analysis and say on 12th of September, for the last 10 years since I've been at CNBC, this has been the historical trend. I think next year you should be prepared with that.
Anyway, it's a rocket, right? I mean, and it looks like just a bunch of, you want to call it some program trade, a basket buying. It looks like it because it's a variety of large cap stocks led by both banks. Actually, let's put up the Nifty bank chart as well. It's something very similar, about 400 points of the Nifty bank since 2 p.m. So it's banks and non-banks, although I must say, because Reliance has been a mover, the Nifty, in percentage terms, the surge is much larger as compared to the Nifty bank. It's one of those days where you just... and by the way, the move is sustaining. That's the point. It's not as if it's faltering or anything of that sort. It's quite incredible to see. The surge is so much that we are now within striking distance of the all-time high, right? 25,333, I think, is the all-time high. And you're about 80 points away. That's it. So look at the recovery from the low, which is 310 points. but I think we are well within our rights to now display the distance from the high as well, which is 80, 90 odd points. That's essentially what the last 30 minutes really has meant for the market. So these are really sort of big, it's a big market. What can I say? I'm not even going into the mid-cap and small-cap part of the market. We should do that as we go along, but the large-cap move themselves quite spectacular. Rima.
Well, there is global support this morning. So Asia closed out with considerable strength, 3.5% gain on the Nikkei, Taiwan up 3%, Kospi Hang Seng also closing up well in the green. Europe too has started trade this Thursday morning with strength, so gains anywhere going up to 1% plus on the CAC and on the DAX. The FTSE is approaching a near 1% rally. Remember, the ECB today is going to be meeting, and about 4:45 is when the decision will be out. And the expectation is that we will have an interest rate cut, a 25 basis points interest rate cut. That's what the street is hoping for and pricing in. There's also the Nifty weekly expiry, so the last 1 hour is going to be crucial. And today, the big winners are the laggards of the last few days. So you've got metals, autos, the CPSC index. So these are the sectors which are doing well, and there is no sectoral index in the red right now.
Well, that's right, Rima. And just one more pocket that's actually got slammed is the oil producers. ONGC and Oil India, both of them have taken a sharp hit. Now, a couple of sales notes that I was looking at, they believe that valuations are pretty okay. Volume growth will come about, and they are not expecting that, pricing, oil prices correct further from here on. So, so based on that, you're seeing a bit of a bounce. Oil India, you pull up a last 10-day chart, the stock has seen a sharp correction. You pull up ONGC, similar is the case. But from the lows of the day, you're seeing a good bounce out there. So these oil producers as well, that did have a rough ride, well, they are seeing a bit of a bounce, in the last few minutes or so. How do you position yourself, though, in the final hour of trade? Mitesh Thakkar joins us. Hi, Mitesh. Good afternoon. It's a party on Dalal Street. What's your view? Take some money off the table, or do you think with the kind of breakout that we've had, you need to trail your stop loss now? The markets want to test higher levels, so just keep trailing your stop loss.
So, Nigel, I think you've already taken the credit for it anyways. But I think, I would still want to trail it for the simple reason that the Bank Nifty is participating. I was highlighting this point that the Bank Nifty is now showing first signs of, covering up for its underperformance, and the absolute chart is also picking up. We had a target of 51,400 and then 51,750. We are, I think, now heading towards the second target, which is 51,750. In case we start getting past 51,750, good chance that we'll look at 52,180, 200 zones. So I think given the fact that the Bank Nifty chart still looks strong, I think it would be ideal to, trail your long positions. And today morning also I was making this point of, buying into financial names like HDFC Bank, etc. I think that call still remains. For the timing, I have a buy on InfoEdge or Naukri. That's a buy with a stop below 7,700, targets of 79.50. And also a buy on Tata Consumer, which I would recommend buying with a stop at about 11.99 and a target of around 12.40.
Okay, got it. Just a few other names, if you will. CG Power, Mitesh, if you want to weigh in. It's been consolidating, I think, about 3-4 months now. Yesterday, it saw a 4% move. It's up 6% today. Are we seeing a fresh leg up, this one?
Good chance of that, Prashant. I think a very good pattern. We have seen for the last few months that about 6 or 7 times the stock has taken support around the 660 mark and started to bounce back. The last time the stock bounced back, it had a closing of 750. So that's the first pivot area, which is the first target. And then the highest closing of 774, 775. So I think 750, 775 should be the first target range, but good chance that we will see a breakout beyond this range. And once that happens, look at a target of around 880 to about 900.
Let's get to the pharma stocks then of the day. Zydus Life and Granules are in focus on the back of the new US FDA observations. Ekta joins in with the details. Ekta.
Tough day when it came to regulatory concerns. Zydus Life, for example, the warning letter which was issued to their Jarod facility became public. So a couple of key points which were highlighted in the warning letter included the failure to thoroughly investigate any unexplained discrepancies. There were multiple cross-contamination events which took place over the past 3 odd months. And investigators, for example, observed multiple instances of poor aseptic techniques as well. Now, separately, Granules was in focus as well because they got 6 observations issued to the company's Gagilapur facility, which was inspected last month. Now, these observations became public, and I think the street was quite concerned about it because the first observation itself went over 10 odd pages. They again pointed out factors such as unexplained discrepancies, and there was a repeat observation from Jan 2023 as well. There were quality unit issues which were pointed out quite substantially in the Form 483 as well. So the street is probably expecting a longer road when it comes to remediation for Granules for their Gagilapur facility, and one is probably not even ruling out the fact that there could be data integrity concerns as well.
Okay, it's a big slam dunk on Granules this afternoon. 16% gone on that. Devin, Zydus is okay. It's in the green, but look at Granules react to that development.
Yeah, Rima, good afternoon. Well, I think the market is wanting to look out for some kind of negative news, and that's where I think the high valuations they get penalized. You are basically seeing, I think, higher amount of growth continuing for most of these companies in the pharma space. And I think any slightest of the negative news, I think, is not going to be taken very kindly. So that's where we call it as a margin of safety, or the defense is missing in the current valuations of these companies. So I believe that I think most of the US FDA related observations do get sorted out in the course of time, and they do not affect the companies working beyond the point of time. But at the same time, currently, I think the market is punishing. I say that I think largely due to the market valuations in many counters.
Okay, all right. Thanks a lot for that, Devin. Well, Devin, I wanted to view on a couple of other names. Vedanta has been in this range, but I'm looking at aluminium prices. They have popped up a little bit, and you've been quite bullish on that counter. Now it's actually got that dividend of around 20 rupees. So though the stock is holding at around 441, adjusted for the last couple of dividends, actually it's closer to around 470, which is still an underperformance if you compare it what the markets have done in the last 4-5 months or so. Your view at around 441, as bullish?
Yeah, Nigel, good afternoon and happy birthday to you.
Thanks.
Well, I think one needs to remain a little bit more bullish about, I think, the entire space in the metal commodity. On one side, I think you are having the situation of the global prices remaining soft because of the fall in the crude oil prices for metal commodity. On the other side, India as a territory showing distinctly high growth or kind of a proposition for most of the metals. So even the cost of energy coming down, I think, is probably going to help these companies significantly. Vedanta, of course, is passing through the restructuring process, and somewhere in the first quarter of next financial year, when they would have completed the entire restructuring process, probably I think this company, individually demerged companies, would show up relatively better strength going forward. So yes, I think current correction in the price because of the crude oil price softening is a good opportunity to buy into some of the metal counters, and I think we believe that it's a contra buy that one needs to buy in the trading counters like some of the metal commodity companies, including Vedanta.
Even Aadhar Housing Finance is seeing a surge. It's 4.5%. And this month itself, it's up close to about 19%. So most of these housing finance companies continue to remain in the limelight, though today PNB Housing Finance has come in for some correction, so the stock is not participating in the up move. But there was this very interesting conversation that Shireen had at the US IBC with Biocon's Kiran Mazumdar-Shaw. She said, "I'm an entrepreneur who's built a business to last. I am not selling out." That's what Kiran Mazumdar-Shaw had to tell us. She also shed light on Biocon Biologics IPO timeline. Ekta's here with some key takeaways from that interesting interview. Ekta.
Start with the key highlights on equity raising. When Shireen did actually quiz Kiran Mazumdar-Shaw about equity raising, she did say that yes, there is some truth to the fact that the company is looking at equity investments. There are rumors doing the rounds on the type of investments that they're looking at, but they cannot comment at this point in time. But they would look at several options, but they're focusing on equity options and maybe some other financing options as well. Now on debt, they have said that they are comfortable in terms of servicing their debt as seen in the past 2 quarters, but they always wanted to be at a lower level of leverage. So while they are in a position to comfortably service debt, they are not comfortable at these levels of debt. So reducing debt would probably be one of the priorities. On selling out, considering that there are concerns that Biocon could be on the block, there could be concerns about a succession plan. Kiran Mazumdar-Shaw really shot down anything like that and said that don't pay heed to any rumors with regards to selling out, and a succession plan is in place, and she is almost at a non-executive level in most of the positions that she has in the companies. In terms of triggers for Biocon, currently they are focused on biosimilars, GLP-1, in generics and drug delivery services. Bicara, which is one of their investments in the US, is in the process of going public in the US, so that would be something to watch out for. The focus for the company is efficiency, paring down debt, and creating an engine for Biocon Biologics. They are targeting an IPO probably in the next 2 years for Biocon Biologics, or maybe even less than that.
Ekta, thank you very much for that. Lots of buzz around this one, right? Whether there is perhaps, it's not as if it's been reported in a news story as such, but a lot of talk that maybe there is a sale in the offing at some point or the other. Stocks moved up quite nicely. I mean, actually, year to date, stocks up about 50% or so. And I think bulk of the moves have come in the last 3 months. I think June was a particularly large month in terms of price gains, but it's moved up even from there. Devin, do you track this one, Biocon? And Ekta, of course, laying out some of the key takeaways from that interview.
Well, I think most of it has been spoken about in the interview, including the concerns. The Biocon per se of late has been showing relatively stable financial performance. And that is more encouraging. Though I think the history hasn't been so kind. I think there have been, situations where the performance of the company have been quite erratic, I would say. In this situation, I think things have started improving a bit. So to an extent, I think the valuation also one looks at it. And given the possibility of biosimilar getting offloaded and monetization taking place, I think that would be a long-term objective for the company as well. That could possibly be the next trigger. I'm not too sure, since we don't have the recommendation of the company, since we are not having the full coverage. We don't put across any kind of recommendation, but I believe that I think the direction-wise and the development-wise, things are moving in a positive territory for Biocon.
Okay. Devin, we'll leave the conversation here for now. Thank you very much for joining in. As we get into a break, let's listen in to some of those excerpts from our conversation with Biocon.
We've always said that we would pare down debt. So obviously we are looking at, equity investments that could pare down debt as one of the, ways of paring down debt. We are looking at other options as well. So there is some truth to the fact that we are looking at equity investments for sure. But we are also looking at other options.
So, let me address the equity options first before I address the other options. Are you close to being able to close something with a potential investor? Is it likely to be private equity? Is it likely to be another pharmaceutical vaccine manufacturer? Is Serum likely to pick up more stake, for instance?
I know there are rumors, doing the rounds. I will not be able to comment on any of those things, but I think it's important for me also to maintain confidentiality in terms of these investment opportunities. I think we have a very porous system which keeps sort of, speculating, and I don't want to add to it.
No, I understand, but what is the debt reduction aspiration at this point in time? What is a realistic expectation that we should work with?
So, first and foremost, I think, as you would have seen from the last 2 quarters, we have comfortably serviced our debt. So it's not like it's a dire situation. I think as an entrepreneur, I have always wanted to be at a very low level of leveraging. And that's why I think we will look at paring down debt to a lower level. I would like to see how we can basically make this a very comfortable business where I don't have to keep kind of, worrying about, looking at our exposure in the future. So that's the way I'm looking at it. So I would say that I'm in a position today to say that we can comfortably service the debt, but I'm not the kind of person who feels comfortable at these levels. Let's put it that way. So that's why I wanted to reduce further so that it sort of basically gives me a better sense of comfort.
Speaking of comfort, and you spoke about the other options, the non-equity options that you're considering at this point in time, sale, hiving off businesses, what could be on the table that you're considering?
No, we would look at several options if it makes sense. But at this point in time, I think we are really focusing on equity options. And some other financing options.
Okay, you said you don't want to add to the speculation. Let me put on table another piece of speculation that keeps doing the rounds, and that has to do with the fact that you're looking at putting the company on the block, Kiran. And last couple of days that WhatsApp message was doing the rounds once again.
Well, I can categorically deny that that rumor or the speculation. I'm an entrepreneur who has built to last. I'm not going to sell out. And I don't think you should pay any heed to such speculation.
Well, what is the succession plan at this point, Kiran, that you're working towards?
Well, I think I have a very professional team of people. I think we have a very strong board. I've also made sure that the board is composed of very strong independent directors. That's the way I would like the governance model to be. In terms of succession planning, I'm almost at a non-executive level, except in certain businesses where I play a strategic role. But most of the operational responsibilities are assumed by my management team. So I really don't think I need to really worry about that kind of succession at this point in time.
Welcome back. Now, Keynes Technology is up nearly about 11%. And Nomura today has come out with a long thematic note on electronics manufacturing services, EMS, the opportunity and the individual stocks. So particularly Keynes is a stock which has risen. Upasana joins in for more on this report. Upasana.
While Keynes Technologies continues to remain in focus, and we can clearly see the stock surging in trade today, as Nomura has initiated a coverage with a buy rating and a target price of 5,969 per share. It believes that the company is the key beneficiary of rising electronics penetration in B2B industrial segments, and it believes that the company's expansion in OSAT and PCB manufacturing will expand the total addressable market to $10 billion for India. Over the long term, it believes that the company's EMS business can reach $8 billion with further upside from OSAT and PCB segments. The company has a strong order book of 5,000 crores as of Q1 FY25, which provides high growth visibility over the medium term. Nomura expects strong 56% revenue CAGR, 58% of EBITDA CAGR over FY26 to FY27, and the stock is currently trading at 40 times FY27 EPS. And Nomura believes that the valuations currently stand attractive given the growth outlook of the company. Hence, Keynes Technologies remain in focus today.
Upasana, thank you very much for that. I must say the market has actually added more. So we are now, I think is it a new all-time high? I think it's a new all-time high. We should put that up at the bottom of the screen as well. Yeah, the sensex is at a record high. The Nifty is also just about right now risen to a new all-time high. What a day this is. I mean, the previous high was 25,333. We are at 25,337. So all done and dusted in one single trading session, right? That's all that was required. So basically, from 2 o'clock now, it's 300 plus points that we've seen on the Nifty. Just tremendous, absolutely tremendous. No other way to put it. Just to look at the contribution sort of numbers here, HDFC Bank is adding about 30 index points. Yeah, there you go. That's essentially the all-time high banner. 30 points coming from HDFC Bank. Bharti is adding 22. Reliance is adding 16. Infosys is adding 15. Mahindra is adding 13. And that's it. I mean, you've got between them, I think about 80, 90 points covered straight up. And of course, I mean, you can add everything else out there as well. So this is a overwhelmingly positive kind of a day as it's turning out to be. On the Nifty, for example, I think you've all 50 stocks are higher. Everything is up. I mean, SBI Life is up the least with a 0.25% gain. And then you sort of move after that. Nestle is up a third, Asian Paints is up a half, and so on and so forth. From the top, the biggest gainers in percentage terms day on day is Bharti with a 4.5% gain. Hindalco is up 4.5%. NTPC is up about 4% or so as well. So just quite something. Pathik Gandotra is with us now, partner at Drone Capital Advisors. We're speaking to Pathik after a while. Pathik, good afternoon. I guess this is what we were waiting for, or maybe our interaction was waiting for, which is markets at a new high.
Absolutely.
Almost exactly as you came on board, markets making a new high, Pathik. So,
the NSE knocked into the bull recently, remember? And they were all memes across as to why the markets will crash. You saw that?
Yeah. No, why don't you, you're a big Bollywood fan, right? What is that dialogue you usually come up with a dialogue to describe the moment?
Abhi to party shuru hui hai.
Abhi to party shuru hui. But see, on a serious note, Pathik, how are you positioned? I want to ask you about EMS as well, because Upasana just highlighted. I don't know if you heard that. The call there was Keynes and Dixon. You were a big holder in Dixon at one point in time. So start with that if you want to, and then we'll talk about other things. Go on.
Yeah. So firstly, what the market pricing in us, just to tell you that I think the market is pricing in a slew of rate cuts and easy liquidity coming in from the US and then flowing all through the global economy, because we are all waiting for the US to cut interest rates. And, people speculate about 25, 50, the dot path, all that. But the point is, net, the US is going to loosen its monetary policy, and that's going to be played through the whole world. India, for example, also is that our inflation rates have come down considerably. And we, I guess, also waiting for the as the mother market to start cutting rates. That's what's going to happen all through. So that the market's, I think, pricing in that, which is a good thing. So that's what's driving this Nifty rally. There's, I think, the strength in sectors. If you look at the sectors with the longest earnings visibility, or actually nowadays the nearest and the highest earnings visibility, are the ones which are doing well. Valuations are getting ignored because of the surge in liquidity. That's what's happening. Now coming to the EMS space, see, again, EMS stocks are across the board extremely expensive. The point is, what's the market exactly pricing in? I think the market is pricing in these companies to become kind of, bigger and global players as times progress. I mean, obviously, once the market prices in ahead of time, there can be steep corrections as well. But I think the path to their long-term future is quite on track, because with the kind of orders all these companies are getting, and I'm not getting into individual names, but across the board, somebody's doing computers, somebody's doing mobile phones, somebody's doing air conditioners, whatever. I mean, all this space is India's manufacturing revival, and not only for India, but for the globe as well. And I think that's what is getting priced in.
Pathik, hi, afternoon, Rima here. So just talking about today's rocket-like move, anything that you've picked up from your friends, the dealing room chatter? Why today this sudden, 350-point up move on the Nifty, sensex up 1,000 points in a span of 1 hour?
No idea, absolutely. More buyers than sellers is all I can say. The point is, maybe it's global flows. Maybe it's global flows which should have come at a particular point in time. I think the thing is that everywhere, as flows are moving, I think once interest rate cycles start coming down, I think emerging markets will benefit the most, and that's what's happening.
So it's hard to put money, right, at these kind of valuations, but money is flowing in. So where is fresh money allocation happening at Drone Capital?
We are a bottom-up investor, so we don't actually go sector by sector. But we are looking at smaller companies now with significant earnings visibility and very. I mean, it's the same. I can say the same. It's the same thesis: good management, good earnings growth, and we don't buy very cheap stocks. So we buy stocks which are at the market has already accorded some level of respectability in terms of the PE. So that's a quality check, because normally stocks which are cheap are often there's more to it than meets the eye. So that's why we buy stocks which have a certain level of PE. So in today's market, I would not buy anything less than 25 times PE. And people look for cheaper stocks, but I buy growth with the PE. So we buy future growth, which is often not available very cheap. So that's where we are. We've also taken some exposure in some new EMS stocks, some smaller. Actually, basically, the whole thing is about manufacturing. We continue to remain bullish on textiles, garmenting as a sector. We have a couple of positions there, where we think the market is still not understanding the way the US the US demand has tilted, has turned, inventories have come off, and all the order books for almost all manufacturers are absolutely full for the next 3 to 4 quarters, and which is just waiting to happen. The earnings growth is already there, and it's already locked in, and these stocks are still very cheap. If tomorrow the FTAs happen, then home textile players and garment manufacturers will benefit a lot. If the Bangladesh crisis that's happening, if that unfolds, that's a very, very big long-term positive. If the Bangladesh most favored nation status goes away, that's another long positive. So I think it's a 10 to 15 year story which is getting built, and the foundation stone has already been laid, and so that's the kind of stocks we'd like to own for a very long time.
Hi Pratik, good afternoon. I think we're splitting the honors. Till the start of the show, I was taking credit for the Nifty breaking out because of my birthday. But then you said that maybe the Nifty was waiting for you. So we'll split the honors for today. But you give us...
Honors are absolutely yours. I really don't really get it goes up or down. I don't run a fund, so it doesn't matter.
Just on a lighter note, Pratik, but since you gave us that theme of textiles and the China +1 played out, then you had the Bangladesh +1 that played out, is playing out as well. Give us a couple of names. How do you play it? Gokuldas?
I can't discuss stocks, please. I will not name stocks, but I'm just saying that leading garment players and leading home textile manufacturers are all that event. Garment players more than home textile manufacturers, because home textile manufacturers already have a very huge market share in the US. But if there's an FTA with the UK or the EU, then home textile players benefit a lot more.
Got it. All right. I think the street is sniffing that maybe, in fact, Gokul Das could be a potential beneficiary. That one has moved to the high point of the day. Let's talk about another theme. The real estate space. There are various ways of playing it. Either you play the real estate names or you play the ancillaries, the tiles, the other companies out there, cement as well. Or you play it via the home financing companies. And we saw the kind of response that Bajaj got just yesterday. And there could be plenty of capital that will be freed up as well. What's your pick from the pack?
So it's a cycle, right? The builders go up as their bookings go up, they start selling more. The real estate company stocks go up. Then once that rally settles in, you first buy a home and then you make it. So then all the building material players start going up because they've all gone through a very bad cycle. So that cycle starts reversing, and that's what's happening. You'll see eventually. I mean, maybe that's not happening as of yet, but that will happen. That tile manufacturers, plywood manufacturers, laminate manufacturers, all the sanitary ware, then all the home appliances, all that will start doing well over the next 2 to 3 years. This is going to be a very long real estate cycle because there has been a very, very huge amount. It's been stagnant for a very, very long time, and the kind of economic growth and employment we are seeing is of a very rare nature, and so that's what will lead to significant amount of growth in home sales and consequently on building material sales. Also, housing finance companies do well. So in fact, amongst the financials, as we'll discuss later, housing finance is a preferred space because that's where you will see strong growth coming through. Companies are largely good quality companies, and as interest rates start falling, they'll benefit from borrowing cheap and since the demand for homes and home finance is very high, lending rates might be sticky. So you might have a margin expansion coupled with strong disbursement growth. So and given the cycle is turning in your favor, control NPLs as well. So that's all the three things work for housing finance companies.
Got that. And Pathik, for those who don't know, was one of the earliest financials analysts, right? Almost in another life. But
in another life. You're right.
But Pathik, you've stayed away from financials very consciously for a long time, right? In terms of buying them. So when you started by saying that the big theme is interest rates coming down. So if we're going to see a sustained down move in interest rates, what's the best way to play it?
So I think, if you look at banks, for example, there's a problem of deposit growth because money is getting diverted towards other sources and deposit growth is lagging. Also, the liquidity is still tight. So RBI is sucking up a lot of the liquidity, which is why you are seeing margins getting compressed, which I think will remain for some time till liquidity eases. In the interim, if interest rates start falling, then I guess finance companies are the best to play, NBFCs are the best to play the cycle because if you look at even the last time before the NBFC, there's a big bull run in NBFCs, which happened when interest rates started falling. And so that's a sector that you have to look at. You have to be obviously wary of asset quality risks, which may exist within certain pockets of the sector. But largely, I think NBFCs, the pack will do well. I would prefer housing finance companies as of now.
Housing finance companies as of now. Absolutely, and of course, I mean, interest in some of the players like the new one, the Bajaj Finance, but even others. I mean, PNB Housing is re-rated, and so many others have been doing so well. Aadhar was a recent listing as well, which has done very well. I mean, some of the other sort of players in the private space, Aptos, Home First, of course, a lot of bets that they will do well and that they will make a lot of money over a period of time. Got that. Pharma, Pathik, do you have positions here, and how do you see this space? What exactly? US generics, local players?
So we are looking at this space carefully, not yet taken any major position. The point is here, I think again a long drawn macro issue is getting corrected in terms of the pricing pressure in the US. I think that's waned off for a while, and I don't think now it has also waned off for a period of time. It's almost like chemical prices, which you think will rebound, but they don't rebound. The point is that in this there's been a lot of false starts, but now it does appear that pricing pressure there has waned off, and prices have hit levels which might sustain from here on, and so then growth kicks in. That's the first trigger that's happened for the pharma industry, and that I think will lead to some level of price performance, which has already happened. Now, within that, we're looking for specific stock. I don't have names as of now, where we see either there's a big product which is coming through, going off patent, which is going to be a big earnings driver going forward. There are companies which are where there's some drug discovery which has happened. People are betting on that. There's companies where there is there's this whole semaglutide rally, weight loss drugs rally across the world. So there are manufacturers of those in the country. So that's going to be a segment where there might be very strong growth. And these are just pockets but I think we might in the end settle for a CDMO player. A good CDMO player is what we would like to own because that's the business model that we like the most. So once we find a good CDMO player at an attractive price, we shall take a position.
I think the last sort of big one in that space was Loris for you, right? Back in 2020.
Yes, and we did participate in the company's rally, but then the point was that there's so much of ARV. I want to avoid talking companies, but since I don't have a position, I can. The point is that there was a lot of focus on the ARV was a big chunk of the revenue, and it did appear at that time that it would be long. The cycle would last longer than we thought. And once the pricing there turned, and also demand and also orders started getting scanty, the stock really fell because there's over-reliance on that segment. It's a great company, however. So, I mean, there will be a resurgence and that's a stock that obviously we can look at some point.
All right,
we respect earnings growth. So first we want to see earnings growth coming in for a few quarters, and that's when we actually take a position. We don't take a position, largely don't take position on turnarounds and bets that earnings will recover.
All right, and minimum 25 times P, right? As you said.
Absolutely.
Great. Good speaking with you. Thank you very much for joining us, and appreciate your time here on CNBC-TV18. Thank you. Good luck. Well, it's 500 points now, so 25,400 is 25,400 plus on the Nifty. So it's a near 500 point rally, 490 to be precise. So just an incredible day is how this is turning out to be. And it all started with that spark at 2 o'clock, and it has not stopped since. I mean, the fire was lit at 2 and is becoming bigger and bigger, and full-scale flame now. So 1,500 points on the sensex is what you have, 1.25% on the mid-cap index, and I think the small-cap index on your screen, I think we should have the small-cap index as well. Should be 1% plus there as well. Nice.
And just imagine there's a lot of money that's blocked because of that Bajaj housing.
In the morning, so that's what the 3 lakh crore blocked for a day, 2 days, temporary. I don't think that money is required. So this is just, I mean, I don't want to say because you don't see days like these very often. We've seen them, but very rarely. All right, we'll take a quick commercial break here. We're going to come back and we'll focus on some short-term trading ideas with our technical experts. Stay tuned.
Welcome back. Maruti Suzuki has launched a Swift S CNG car at ex-showroom price of 8.2 lakh rupees. This model is the 14th car in the CNG sector. CNBC-TV18's Parikshit Luthra spoke to Partho Banerjee, Senior Executive Officer, Marketing and Sales at Maruti Suzuki, to understand why the company is betting on this vertical. Listen in.
New Swift S CNG, which is the most fuel-efficient hatchback in its segment, 32.85 kilometer per kg, which is more than 6% better than the previous generations Swift CNG. Coming to torque also, the torque has also got enhanced by 6% to 102 Newton meter. Currently, we are having, including the Swift, we are going to have 14 models which are having the CNG in our portfolio, product portfolio. We are right now having a market share of 73% in the CNG segment, and the total contribution of CNG in our sales is 33%. Every third car which we are selling from the Maruti stable happens to be a CNG variant. In the month of August, we are seeing that the festival season, which started from Kerala, the Chingam, the Onam is in the month of September, but last year it was in the month of August. But despite that, we have seen that the booking has gone up by 10%. And in the start of the Ganesh Chaturthi, very first day, we have seen that the deliveries have gone up by to the tune of 10%. So we are very positive that in this festive season, we are going to have a good traction and the sale should go up.
Well, the markets are just rocketing. 500 points on the Nifty. The Nifty Bank, that's the one that's breaking away, and it's up close to around 800 points now, and that's been an underperformer. You pull up a one-year chart of both these two, you'll see the Nifty Bank has actually been, far behind in comparison to the Nifty's performance. But for the time being, it's managing to keep pace, up only around 13%. In a short while from now, we'll get both those two charts, while the Nifty is up close to around 27% or thereabouts. Mitesh is back with us. Mitesh, beautiful trading session. What's the call? And individual stocks as well, either a buy or sell trade for a reverse trade in a couple of days?
Yeah. So, Nigel, as I said, I think, the Bank Nifty is kind of covering up for its underperformance, and that is what is fueling the Nifty, apart from the fact that other Nifty stocks are doing well. So, Axis Bank is a BTST with a stop at 1195 for targets of 12, 17, 18. And Bajaj Finance is a BTST as well with a stop below 7404 for targets of 7490.
Thank you, Mitesh, for that. More milestones are getting crossed. The sensex has crossed the 83,000 mark for the first time ever with the 1,500-point rally. Reliance Industries is the big contributor. On the way up, HDFC Bank too is one of the star performers in today's trade. But Paytm held their annual general meet. The founder, Vijay Shekhar Sharma, spoke to shareholders and was committed to profitability, adding that the focus was on compliance-first business. In letter and in spirit. Ritu is now joining in. She listened to that entire AGM starting 9 a.m. Ritu, what were your key highlights and takeaways?
Well, the big takeaway from Paytm's annual general meeting is the clear message coming through from its founder and CEO Vijay Shekhar Sharma that the company aims for profitability with a focus on compliance-first business, both in letter and in spirit. Now, important comments given that the company continues to post losses with the first quarter net losses widening to 840 crore rupees, and that's been one of the big investor concerns, apart of course from the fact that there was regulatory action against its payment banking arm. Now, in response to these escalating losses, Paytm had in the last quarter announced an aggressive plan to save up to 500 crores annually on employee costs and also cut down the ESOP cost. In FY24, in fact, it achieved the first full year of EBITDA before ESOP profitability since the IPO, but the focus now, the company says, is very much on delivering profit after tax. At the AGM, the company reiterated that its priority is to grow the core payment business and cross-sell financial products. It aims to expand the merchant base from 40 million currently to more than 100 million and then cross-sell and upsell financial products to this larger base to achieve growth. Vijay Shekhar Sharma also pointed out that Paytm is going to leverage advanced technology for financial services, including distribution of loans, insurance and mutual funds, and it sees opportunity to cut down costs further with AI adoption. Now, its subsidiary, Paytm Payment Services Limited, also recently got the FDI clearance from the government, and Vijay Shekhar Sharma said it is now going to reapply to the Reserve Bank of India for a payment aggregator license very soon.
Now we are talking compliance first business, a business that takes care of every regulation fully and in letter and in spirit. तो हमारा पेमेंट का बिजनेस मॉडल जिसमें हम अपने कस्टमर्स के साथ बात करते हैं कि वो एक हमें डिवाइस लें हमारी और उससे पेमेंट प्राप्त करें, उसका सब्सक्रिप्शन और जो पेमेंट इंस्ट्रूमेंट्स हैं उसकी कुछ फीस और यूपीआई जो आप जानते हैं जिसको कि भारत सरकार ने मर्चेंट्स के लिए फ्री कर रखा है, जिसका सारा का सारा कुछ एक इंसेंटिव एक तरीके से साल के एंड में हमें प्राप्त होता है, वो बिजनेस मॉडल एक बहुत ही रोबस्ट और स्केलेबल बिजनेस मॉडल है। परंतु अभी हम कोर पे फोकस रहेंगे, हम पेमेंट फोकस करेंगे और हम अपनी क्रॉस सेलिंग फाइनेंशियल सर्विसेज फोकस करेंगे। मेरा कमिटमेंट है ग्रोइंग कोर पेमेंट को रखने वाली कंपनी जो एक प्रॉफिटेबल, सस्टेनेबल, फ्री कैश जनरेटिंग कंपनी है वो बने और वो एक स्केलेबल कंपनी बने। ये हमारा कमिटमेंट है, ये हमारा उद्देश्य है।
Okay, that's the word from Paytm focusing on profitability. EIL is a big mover, 8.5%. Zomato is adding on heft. That's another 5% gain. In the NBFC pack, L&T Finance, IDFC First Bank score on pricing and on volumes. Get into a break. We'll come back with more market talk. Stay tuned.
All right, welcome back. Well, final few minutes of trade. A couple of stocks, though, are giving up some part of their gains. Nestle has moved to the low point of the day, so I think we should get the intraday chart of that one. TCS actually has slipped from the top, so let's pull up both these two names. The markets have slipped a wee bit from the top. You can't quibble at that, but some of the stocks have slipped a little bit. TCS as well should come up for you. Amrish Palika joins us. Amrish, the headline index is doing well, but it's a stock-specific market. So what's the stock on your radar for today?
Hi, Nigel. And first of all, wishing you a very happy birthday.
Thank you. Thank you.
My pick for the day is Bandhan Bank. Again, it's a long-term pick. Among the fastest growing banks in that segment with about 1.8 trillion rupees in deposits. And it's present in about 35 out of the 36 states and union territories. They have 501 branches, 2,000 plus banking units. And the asset quality has improved with sequential improvement in slippages. And despite high yield MFI loans, Bandhan has maintained strong NIMs because they've been reducing the MFI loans to a large extent. And NIM stood at about 7.6% last quarter, which shows an improvement about 22 basis points. And the yields on advances improved by about 60 bips to about 13.9%, despite the cost of funds for the quarter increasing to 6.9%. Management has guided for NIMs to be between 7 to 7.5% and provided a guidance of loan book growth of about 18 to 20%, which is quite decent. It aims to accelerate growth in secured assets such as housing, commercial and retail loans like vehicle finance. So I have a price target of about 280, which is 1.5 times adjusted book value for FY26.
Okay. Prestige is also seeing big moves in the last 10-15 minutes. First, it spiked up close to about a 6% rally, and now some profit booking, so off from the highs, but still going strong. Amrish, hi, afternoon. Zaggle in 3 days has moved up nearly 25-30%, just in 3 days. What's caused this re-rating?
No, I didn't get the stock which you talked about.
Zaggle prepaid.
No, I really don't track that stock, so difficult for me to really comment on that.
Okay. In the EMS category, the electronic manufacturing space, today Kaynes Technology is surging. Which one would be your top bet where there is still some upside?
Kaynes, I think, can still move up further from here because that momentum is there. And the other stock, which in fact I've been suggesting, is EPAC, which again has moved up decently well. And I think we can still see either 5 to 8% move from the current levels.
You know, Bandhan, this is it's an interesting pick, Amrish. Bandhan, I think, is pretty close to its COVID lows, right?
Absolutely.
It closed March of 2020 at $200. It's at 196 today, right?
Yes.
And of course, it fell to 152, but there aren't many which you'd find there, right? At those levels.
Exactly. I think, you know that I've been a contrarian picker for a very long time.
Absolutely. This is the most contrarian of all.
Exactly. I think the bad news is all priced in. There's been a number of adverse news for this bank over the last couple of quarters. The last one was the CEO stepping down, RBI not really approving the extension. We've had the RBI director being appointed because the earnings for March quarter was a bit disappointing. I would say quite disappointing. But then we have seen a decent pickup from Q1, and I think all the sort of efforts or whatever focus the bank management has, I think will surely show that the performance even going ahead. I think Q2 and Q3 also could surprise us on the positive. And I think that's when people will again start looking at the stock, because I think there's enough amount of liquidity. People are just looking for new ideas. And once you start seeing that uptick, like a continuous uptick, we've seen Q1, Q2 and Q3 also we see that uptick. I think there'll be people rushing in to buy this.
What about Vodafone Idea? Amrish, everyone was quite excited. It gave you a quick fire move to around 1780. Now it's corrected to 13.5. Promoter has put in some money. You're enthused, or you say rather stay with the leader?
No, if you have Vodafone in your portfolio, I would say possibly hold on with a stop loss of 12 rupees or so. I mean, it can move up, I mean, with the market. But then if you look at it fundamentally, I think it'll take a long time for it to come back because they're still losing subscribers. Although, I mean, they're looking at, like picking up new loans to, in fact, fund the capex which they're talking of. But then, I mean, for the service quality to improve, for the product quality to improve, I think it'll take a while. And I mean, the other two, competitors are too huge for Vodafone. So I really do. I mean, I really don't see a major move up. I mean, even when the initial funding had happened, I mean, you had asked me, and I said possibly 18 is the top for Vodafone. I think it was quoting at about 12, 13 at that time. We saw those levels. It's come down. But then I wouldn't suggest anyone to buy fresh at this point of time. There are enough other stocks, interesting stocks to buy than something like a Vodafone.
Okay, all right, Amrish, appreciate you joining in. We'll take your advice and thanks a lot for joining in. Well, time to wind down the markets then. The Nifty actually is ending 100 points off the high point of the day. So we have slipped a little bit in the last 15 to 20 minutes or so, but otherwise, beautiful trading session. And because of averaging, we'll actually end above the 25,350 odd mark. From the Nifty pack, metal stocks, they were got a bit of a booster shock. They're hoping that you'll see some easing coming in from China, hoping that the Fed cuts rates as well. So you had Hindalco that was up and about, JSW Steel was up and about, you had Tata Steel as well that did do well, JSPL was higher. The other pack was the Telecom pack. Bharti Airtel was up in trade today. You had Indus Towers as well that did do pretty well. And NTPC as well as Shriram Finance, all of them the top gainers in trade. But a beautiful trading session, 400 points higher on the Nifty. The breadth of the market as well looked very, very good, with the number of stocks that were advancing were close to around 1,500 stocks in comparison to around 800 that were declining. Big gainers, Canfin Homes, Nalco, L&T Finance, massive gains on them. Zomato as well. Well, that stock has pulled back nicely from the recent lows. It went down to 250 and now it's back at around the 280 rupee plus mark. What didn't do well? Couple of pharma names, namely Granules as well as Alembic Pharma. But a super trading session. The bulls will feel good. Expiry day played out in their favor. For the time being, though, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward is waiting for you on the other side.